We're going live. Y'all are gonna have to give me one moment. I need to get this to the email list. Just one moment and we will get started. YouTube seems to be changing the way you can do a live stream. It used to be a lot easier. My team and I are struggling through this, but we will get started in just a moment. So just stay patient. If you have questions, feel free to drop them. Let me copy that link. Save and continue. One moment if you're joining. Just one moment. Copy. One moment, and we will get started. Sorry for the technical difficulties. Okay. Again, sorry for the technical difficulties. We are going live. We're going to be doing a Q&A. Unfortunately, the desktop just completely failed on me, frustrating as it is. So we're doing mobile, but good evening. For those of you that are here, we'll wait a minute for people to get here. Let me share this link one last. Okay, so I'm just going to start going until we have everyone come from the other stream to this stream. So thank you for those of you who are here. Excuse me for the technical difficulties. And we're going to get started now. So this is meant to be a Q&A to answer any questions and all questions that you may have with regards to business acquisitions. We may be a little shorter than prior because I get the distinct pleasure of holding the phone while I do this live stream as opposed to being able to simply talk at the computer. So technical difficulties. In fact, let me see if I can set this down. It might be a little easier, a little better. Yeah, we'll do that. So sorry for the technical difficulties. Welcome all. And we're just going to get right into this. Excuse me if the audio or video quality is not as exceptional as we were hoping for. Again, technical difficulties, but enough of that. Let's get into it. I will say a few things about the business acquisition world before we start. And by the way, someone writes, I volunteer to be the chief of YouTube streams. I accept. Email me at info@jasonpaulrogers.com so that we can do more of these in a more succinct and smooth manner. My team and I are clearly not adept enough, and I like these live streams. I think they're fun. It's nice to be able to answer questions. So Paul, I will take you up on that. I will pay you, no problem. Feel free. Please email me, info@jasonpaulrogers.com. Okay, so just a couple of words about deal making and buying businesses before we get into the Q&A, and I'll let those of you who have questions drop them here. Probably won't go as long, so if you have questions, drop them now. Probably won't go as long because we're using the iPhone as opposed to the regular computer. But okay. So a couple of things about deal making and buying businesses in 2023. So those of you who are paying attention to the news, who are paying attention to the economy and the like, have obviously noticed that interest rates have been going up quite meaningfully. Many of you obviously have noticed that you had some banking failures that have occurred. Silicon Valley Bank, First Republic just got bought up, Signature Bank collapsed. So there's been some chaos out there in the marketplace. All of that notwithstanding, the $1 to $5 million business acquisition realm, that $1 to $5 million business acquisition is still as alive and well, really as ever before. I saw data in the trillions as far as SBA loans that are getting done per year. We're talking trillions, not billions, trillions of dollars in total loan value that's getting done per year in SBA land. And the reason, for better or for worse, that that's happening is because you have that government-backed guarantee. That government-backed guarantee is allowing these lenders to get comfortable doing deals that they otherwise wouldn't do, quite simply. And so because of that government-backed guarantee, these loans are getting done. And lenders more and more are falling in love with the SBA. The SBA, in my opinion, is the simplest platform for getting your first few deals done that exists in the world today. Period, end of story. And so quite simply, that is really what I recommend for those of you that want to get in the game of business acquisition. It's what I recommend for those of you that already own an existing business, who want to expand your business and double the size of it and double or triple the enterprise value of that given business in a fairly short amount of time. It's a compelling opportunity. It does require a personal guarantee. It does require a 650 or better credit score. It does require that you're not a felon. And it does require, if you're an existing business owner, that your business showed profit on its most recent year's tax returns. But if you meet those qualifications and you can read, write, and speak English fairly well, then the SBA is a pretty compelling opportunity for you to get up to $5 million worth of capital. So that realm is alive and well, again, because of the government-backed guarantee, whereas other forms of lending are a bit more strict than they were, say, in 2021 or in 2022. But nevertheless, SBA land is alive and well. So that is that. I would also add that the competition is getting a bit hotter within the business acquisition world. And by that, I specifically mean there are more buyers competing for deals now than there were even 2 or 3 years ago, which is a double-edged sword. It means on one end, it's a little harder to get in the game, especially if you're sloppy in your approach. But it also means that there's more buyers that will help you fulfill a quick exit when you want to ultimately exit and sell your portfolio, right? So it's a bit of a double-edged sword. Anytime you have a higher barrier to entry, on one end, obviously it means it's harder to get in, but it also means that once you're in, you have a coveted asset, an asset that is coveted by a greater number of buyers than I saw even just 2 or 3 years ago. And so it is a double-edged sword, but I would ultimately say that I like being in high barrier to entry endeavors because once you cross that chasm, you truly have something of intrinsic value. I see a commenter here, Rockstone Trucking, who puts the all hail hands. That is a kind of business that I think could do really well. I have a client that's working in the logistics business. I think you could do really well in a business like that. Services, blue collar services, even white collar services. Have a lawyer who's working in the white collar service world right now, getting started with making acquisitions in that world. But in general, these good old-fashioned Main Street type businesses, if you will, if you own an existing business, I would really implore you to look at buying a business in the next market down, even buying a competitor in your existing market. And I will say as well, if you have that existing ownership experience, you'll do very well when you interact with sellers, whether it goes through an on-market channel, in other words, it's a deal that's listed through a broker, or the best, an off-market channel. I don't want to give any specific details, but I had a meeting specifically with a business owner in the plumbing industry here in Central Florida. And, one of the reasons he took the meeting with me as opposed to somebody else is because he realized and recognized, the logo. He recognized this crazy worm we have on our hats, right? And so he realized that, we're already in the industry, already in the business. He's seen that little crazy green worm that we have. And he said, hey, I wanted to talk with you guys to start because I know you guys are players in the industry. So if you're already an operator, a day-to-day operator in your business, that's the easiest. That's the lob toss as far as buying a business in that $1 to $5 million deal range size and really expanding from there. If you're going from 0 to 1, it's a different animal. It's more difficult. That's what I did when I started. It's really tough if you're broke. That's how I started. So it can't be done, and you can watch the YouTube videos for all the way back to review my story. I documented the whole process from 2018 until now. So it's doable, even if you don't have any money and you don't have an existing business. It can be done, but if you are an existing business owner with a landscaping business, a plumbing business, a logistics or trucking business, an assisted living business, etc., and then you want to expand to the next market over through acquisition, or you want to buy another business in your given market, those are lob tosses at the net as long as your existing tax returns, most recent year's tax returns, show profit. Huge point. If you're an existing business owner and you filed an extension, I would implore you not to write off everything under the sun and show a taxable loss. I get it, you don't want to pay taxes, but if you write off everything under the sun and show a loss on your tax return, I'm no CPA, so talk to your accountant, but I'm just giving you a little hint. It'll preclude you from securing SBA finance and really any form of finance because a lender is going to look at the returns that you send in to Uncle Sam and the IRS to see whether or not your business was profitable as reported on your tax return. Hopefully that makes sense. So those are some thoughts for you. As far as our business, things are going really well. We had our best first quarter ever. We're on a run rate of pushing near $10 million in sales per year in Tampa Bay here, and some really exciting things on the deal front as well. So it's really exciting to see how far you can go in a relatively short amount of time. I got into the plumbing business 2 years and 4 months ago, I mean, maybe actually 2 years, 6 months ago now, November of 2020. So yeah, it's about 2.5 years. So things have gone really well. It's been a hell of a ride. We got into the air conditioning business about 18 months ago. That was August of 2021. And it's been really good for us. It's been really good. Made some mistakes along the way. I speak pretty transparently about the mistakes we've made, but it has been good. So I digress. That's enough about us. That's enough about me. We're doing really well. We're really excited about where things are going. And I guess at this point, I'll just answer some questions. I won't be going quite as long as initially planned because I'm doing the mobile live stream. We took up Paul, I think it was, who is going to be the chief of YouTube streams going forward. So Paul, I sincerely am going to take you up on your offer as long as you have the qualifications to make sure that you do a better job than our team. Though admittedly, not a very high margin that I've set for myself or a very high bar I've set for myself to be able to do these streams. So let's get into the Q&A. If you have questions, write them now because I won't be doing this all night long. It will be a first come, first serve. So those of you who have been here before know how this goes. We're just going to start reading through questions and we're going to rock and roll. Also, if you wouldn't mind thumbsing this thing up, I appreciate it. It helps get the algorithm going, helps other people see this content. Okay. Zano Bailey writes, what are your thoughts on rolling up insurance companies? It's actually funny you say that, Mr. Bailey. I have a gentleman that I've recently met whose company has bought a plethora of insurance businesses. He was a senior, and I think still is a senior executive in a large insurance group, and they've been rolling up a bunch of smaller insurance companies over the last 5 or so years. I don't know a heck of a lot about the insurance business, so I don't know exactly how well the insurance business would fit in kind of an SBA model, like what I tend to teach. But my knee-jerk reaction is it's certainly possible, but the first thing I always advise people to do is just go on Biz Buy Sell and see if there's insurance companies for sale in the realm of 3 to 4 times earnings or less. If there are, then it's a viable play, right? If there are businesses that are for sale in the States or in local states near you that are for sale, at 3 to 4 times earnings, which essentially means the purchase price is no more than about 4 times the yearly earnings or profits or cash flow or seller's discretionary earnings or owner's benefit. And I know those are a bunch of jargon-like terms, but those are all terms that brokers will use and sellers will use to roughly equate to profit. Okay, but if the profit of the business is about 3 to 4 times what the purchase price, in other words, if the purchase price is about 3 to 4 times what the profit of the business is per year, then you have a viable business acquisition play, at least from a valuation perspective. So I would be interested to see how many insurance companies are for sale in range, and depending on that would really be the basis for whether or not it makes sense to go forward. Generally, insurance tends to be a rich man's game, so I'm a little uncertain about exactly how many acquisition targets there will be, but I don't know, for I'm not in the insurance business. I digress. I made my comment to you, Mr. Rockstone Trucking. I think businesses like logistics and trucking are good businesses for the acquisition game. Okay, 400 Racer asks, how do you get past the 5 to 10% equity requirement of an SBA loan if you're not great at raising money from private investors? Otherwise, tips on raising from private investors without a track record. So if you have an existing business and you're making another business acquisition in the same industry, then you can get what's called a SBA expansion loan, which actually completely gets you around the requirement for the 5 to 10% equity raise. So that's the immediate answer. Otherwise, it is about being a better capital raiser. And really, I'm here to tell you that raising equity is not all that difficult if you follow a proven game plan. And I'm not just going to say, and sign up to my program to learn how. I'll give you some tips now, and there's a ton of free content here on YouTube as well. So the first thing I would say is go to your friends and family. And I'm not telling you to do the old insurance scam where you raise all, or you get all your insurance or your family members to sign up for your insurance. But just start by practicing your pitch with your friends and family and tell them ahead of time, I'm just practicing my pitch. Tell me what you think. Okay, you're not actually trying to raise capital from your friends and family right now. You're just going to practice your pitch with your friends and family. And then make your pitch, make an elevator pitch, like a 60-second or less pitch, and see what they say. Ask them honestly, was that compelling? If it wasn't compelling, ask them what was it that didn't register? And they may or may not be able to give you good feedback. But what I would say is keep practicing your pitch to people that you know and trust. And only once they say to you, wow, that sounded really good, is it time to go beyond your immediate network to raise capital. If you're able to get your friends and family to say, oh my God, that was a really good pitch, and especially ask people that aren't just yes people, ask people that maybe are good at giving you criticism. If you have that tough uncle, right? That's the guy you want to practice your pitch to. But I would say to you, ultimately, raising capital is just an extension of sales and really just an extension of communication. And so if you're really having a hard time pitching, then it means you are not getting to the point in speaking to the things that truly matter to an investor. What truly matters to an investor? One, upside. Why do you think Silicon Valley has become the massive world that it is as far as capital? Because there's huge upside. So huge upside is number one. You have to speak to your business opportunity in a way that properly articulates the upside. Number two is you have to also simultaneously speak about how you're mitigating downside risk. Your pitch in 60 seconds should speak to the massive upside. And if your deal doesn't have and your industry doesn't have massive upside, then you need to rethink your deal and your industry. But you should be speaking to massive upside. You should be speaking about how you're going to mitigate downside. And really, you should be speaking then specifically about the deal or industry in question and why you're so enthusiastic about this business opportunity. And you should try to really get a compelling, tight bit in 30 to 60 seconds that, again, speaks to the upside opportunity, speaks about how you're going to achieve that upside opportunity while mitigating downside, and speaks to why your business opportunity truly is unique and exciting and opportunity laden. In a nutshell, that's what you're trying to do. If you need to improve your communication and practice getting to the point in a short and succinct manner, I think Toastmasters is one of the best investments somebody can make in their communication skills. Toastmasters is public speaking practice, basically. It's going to cost you like $70 every 6 months, so it's really affordable. It's kind of a stodgy environment. Some of you in the chat may be able to share some thoughts on Toastmasters. It's a bit of a stodgy program, but it's also really effective. You just get in front of people and practice public speaking. So if you're not very confident at raising capital and you don't feel like you would be able to raise capital, it probably means you don't feel that comfortable speaking confidently about something, number one. So improve your communication skills. Toastmasters is a great platform for that. But also, this is the importance of getting momentum. You don't just go out one day and raise capital. First, you pick a great industry. After researching the heck out of it, and through that research, you should feel really confident that your industry is Amazon-proof, AI-proof, recession-proof, that it's just a beastly industry. That's a starting point. Do you truly believe in your industry? If I'm talking about plumbing, I can tell you in sincerity that plumbing has been in existence since the time of the ancient Romans. The ancient Romans, 2,000 plus years ago, had aqueducts and sewer systems. So as far as an industry is concerned, plumbing has literally been around since the Romans. It's probably not going to stop existing in my lifetime. So you want to talk about an industry that's recession-proof, that's bulletproof, that's lasted 2,000 years, that's plumbing, right? And then from there, I can start talking about the upside and talking about how we're making a number of acquisitions and we're buying these businesses at between 3 to 5 times earnings. And ultimately, we'll sell our portfolio at an upwards of 8 to 15 times earnings, which creates a huge equity arbitrage. I can also talk about, again, the downside protection that plumbing has with regards to the fact that it's literally been in existence for 2,000 years, that it was, what do they call businesses during the pandemic? Necessary businesses, or what was that weird buzzword they put? Where they let you keep running even during the pandemic. Plumbing was one of those, whatever the hell they called that now, I forget. But, right, so plumbing has a heck of a track record. Beyond that, I built a deal team when I started in the plumbing and AC business, a deal team of a legal professional, an accounting professional, and an industry expert professional, all of whom in combination are helping me make sure I'm looking at deals like a professional, not like an amateur. So even if you don't have a robust track record, you had the foresight and the wisdom to build a robust deal team around you to ensure that your team is a composite unit, has a plethora of experience. It's huge. And then you go out and look at a plethora of deals, pass on 80 or 90 or 95% of them, only select the creme de la creme, negotiate that thing like a beast because you have a world-class team behind you. And then when you finally are talking to the investor about actually raising capital, it's not like you don't have a track record. You've been looking at 50 deals in the plumbing business over the last 9 months. You've passed on 98% of the deals, but you finally picked the gem. You believe in plumbing because it's been around since the age of the Romans, because you have a world-class team that's helping you analyze these deals to make sure it's the right one, because you have an M&A strategy that's going to allow you to buy this business at 4 times earnings, and once you do this 3 or 4 times, sell the portfolio at upwards of 10 plus times earnings, and you can see how your pitch starts to get pretty compelling. I have some videos on my YouTube channel about capital raising. I would implore you to watch those. There's one in particular that basically is, I think it's titled something like How to Raise Private Equity or How to Raise Investor Capital. Just search my name, Jason Paul Rogers, with How to Raise, private investor capital or private equity, and you'll find more content on that. But that's the answer in a nutshell. All right, if you're appreciating this stream, thumbs this thing up. Sorry for the confusion early on about the changing link, a little bit of technical difficulties. Really appreciate you being here. For those of you who are new, I'm Jason Rogers. I'm the founder and CEO of Brighter Utilities, the majority owner of Brighter Utilities. We buy plumbing and air conditioning businesses, and at night, sometimes I help people buy businesses as well. You can learn more about myself at jasonpaulrogers.com. We're gonna go through more questions, so if you have them, drop them in the comments. If you're liking this, thumbs the thing up. Let me keep my vocal cords in good spirits, and let's rock and roll. All right, we won't do this too long because I'm using the mobile due to our technical fail earlier, but we're rolling with it and we're having fun. Hopefully you're enjoying this. Moving on to Nikos. What bases should you cover when interviewing potential board members, and what questions do you ask them? There's a lot to say there, and I have a lot of videos on YouTube about that, but you're asking me personally, so I'll answer directly. I mean, firstly, you want to get a sense of their qualifications and their experience, right? Have you owned a business in this given industry before? If so, did you have a successful exit? What corporate experience do you have in the given industry? I'm talking about industry experts because I believe that to be the most important piece of the puzzle, right? So did you have the experience of founding and growing and exiting a company in this given industry? Yes or no? Do you have corporate experience working for a large player within the industry? Yes or no? And then for all individuals you're bringing onto your deal team, I reference it as a deal team. I understand what you mean by a board member, but I really call it a deal team because I want people to be willing to roll up their sleeves in the first few deals. A board of directors suggests that they're just gonna, smoke cigars in a conference room and tell you how the world works and whatnot. I want somebody or some bodies, plural, that wants to roll up their sleeves in the early days. But those would be some of the main questions I would ask for an industry expert. I would also ask if they have anything on their past, criminality-wise, that could be a problem. Anything that would flag up. And then if they say no, if they say yes, then no deal. Unless if they had a speeding violation or something goofy. But if it's something meaningful, then next. And then equally, if they say they don't have anything significant, then the follow-up for me would be, well, then would you mind if I ran your background just to confirm? Since we're just starting to get to know each other, I'm going to stick with what Ronald Reagan recommends. Trust but verify, right? The old Reagan quote. I actually have a hat somewhere that says trust but verify. I don't think it's here. Let me see. It's a classic. I do have this one. Great tenet of what we do, free cash flow. I think it's backwards, but I digress. So those would be some of the questions I would ask. Certainly the criminality piece is really important, making sure there's nothing on their background that would keep them from being a professional in your endeavor. For lawyers, you want to make sure that they are a corporate lawyer that specializes in M&A, not a litigator, not a defense attorney, nothing like that. A lawyer is not just a lawyer. There's so many types of lawyers. You want an M&A attorney. And then on the accounting side, you do not want a tax specialist. You can pay an accounting firm down the road once you are making a lot of money to help you avoid paying taxes legally. Okay? So that's not what we're looking for. On the accounting side, what you're looking for and what you're searching for is specifically somebody that has a robust amount of experience, either in M&A with due diligence, analyzing financials, and or an auditor. Somebody that's really good at getting into the nitty-gritty, into the weeds of financials to ensure that you don't miss anything. The most important thing of all, though, for you, in my opinion, is learn to read tax returns. If you're going to buy businesses and sign on the dotted line and look to create a lot of wealth in this game, then learn to read tax returns. That would be my professional recommendation for you. Okay, let's continue. What about personal guarantees? Mason Mazzaro asks. What about them? That doesn't really say much, but yes, I have signed on the dotted line. And people on the internet will try to tell you, oh, you don't need a personal guarantee with my unique M&A strategy, my wealth creation blueprint. Okay, look, my experience, and it's not just I'm telling you, if you really want to maximize your opportunities through creating wealth in the business acquisition game, you should expect to sign on the dotted line. In other words, you should expect to personally guarantee. Hate to be the bearer of bad news. There's a lot of bad faith actors trying to peddle programs or mentorship or whatever the hell they're selling. I don't have any negative thing to say about somebody who's selling their expertise. I sell my expertise. I have no shame in selling one's expertise. What is shameful is bullshitting people, pretending like there's a full stop, guaranteed path to buying all these businesses without personal guarantees. Now, can you buy a business without a personal guarantee? Yes, you can. Well, then, Jason, I thought you just said that you're going to need personal guarantees. Now you're saying you don't. What the hell are you saying? Look, business is not black and white. Are there ways to buy businesses without personal guarantees? Yes, there are. Seller finance comes to mind. Unsecured credit lines are also there on the table, and unsecured loans are there on the table. However, deals where there are no personal guarantees before you have a track record tend to be shitty deals. The best financing and the best deals tend to command a level of commitment from the buyer, especially when you're getting started. Only now, some 3 years later, the better part of 3 years later, with Brighter Utilities, am I just starting to be able to back away from the personal guarantees. Now again, if I was completely avoidant of personal guarantees, could I have bought a business or two? Yes. But would the businesses have been at the quality level that the businesses I've bought have been? And the answer to that is no. My willingness to sign in uncomfortable places gives me a competitive advantage over somebody who was unwilling to sign. Hopefully that makes sense. And for some of you, maybe that's a deal killer as far as buying businesses. Well, good. I'd rather be honest with you and just say, for you to truly compete at the highest level and create a lot of wealth in a short amount of time, you have to be all in. That's my lived experience, and that's what I would just sincerely tell you. So you didn't ask for all that, Mr. Mazzaro, but I gave it to you. So if you're liking the transparency and candor of this stream, and if you're appreciating it, thumbs this thing up, drop your questions, and we continue. Charlie Fry asks, it seems you really enjoy being an operator in your sector. However, in hindsight, would you choose the plumbing HVAC industry again, or does home services not provide enough good deals for a roll-up? No, I think home services is fantastic. It's competitive. It is very competitive. But as I talked about earlier on the stream, and you may have missed it because I know we've had a bit of a debacle as far as setting the right link for the stream, but I want businesses in industries that are competitive, that have a high barrier to entry, that have a licensing barrier to entry in all of these things. Because when I'm the one that can buy these businesses in these valued industries with licensing challenges and with all this competition, then I truly have the gold, right? So no, I would actually be exactly where I am right now. There's some other businesses that I might explore if I were starting completely anew at this point. But I'm very happy with where I'm at. What I'm very glad I did is that I pivoted away from the mobile home park industry where I started with Brighter Living. I'm really grateful that I pivoted away from that. The earnings multiple in real estate, they're just too damn high. I would have had a lot of gray hair in the old beard before I truly got to the net worth level that I'm looking to get to. So I'm really glad I pivoted away from that into home services. But I'm very pleased about being in plumbing and air conditioning. It's treated us really well. The state of Florida has treated us really well. I've made some mistakes, don't get me wrong. I've made a couple of key mistakes in the first couple of years. We've learned from those mistakes and we're better for them. So it's not to say that I've never made a mistake or that I've been perfect or that I don't have any regrets or not regrets, but in retrospect, are there certain things within my endeavors I would have done differently? Absolutely. But as far as picking an industry is concerned, it's been really good. I will also say, however, the Nebraska property is doing fantastically well. It's been really, really good. But you just can't double the value of a property overnight without huge capital investment, right? Whereas you can double the value of a business in 18 months. Like you can double the value of a business in a short amount of time. Much, much more easily to create a lot of equity in the game of business than real estate. Higher risk, much higher reward. I like risk as long as there's the commensurate upside associated. So for me, it's been a great decision. Mr. 400 Racer 37 asks, does the SBA at all of your or look at all of your personal income tax returns? Yes. Short answer is yes. Here's the good news. Whether you're making a lot of money or not, as reported to the IRS as an individual, does not matter. When I did the first SBA deal I did to start Bright Utilities in November of 2020, my prior year's tax return looked horrible. My income was really, really bad. That was 2019 was the year I bought the property, but we bought it just before fourth quarter. In the first 3 quarters of the year, I didn't make any money at all. I was on the road just trying to start Brighter Living. And so my 2019 tax return looked really poor. And so then in 2020, that was the tax return, the most recent year's tax return that they looked at to make the underwriting decision for me to buy the plumbing business that we bought in Clearwater, Florida. And it didn't matter because they looked at the business's tax return to make the decision. My credit score was high enough, right? My credit score was like 700, so that was really important. They will look at all your personal information, but you don't need to be making 6 figures a year or even 60 grand a year to be able to get an SBA loan. You need the 5% down, assuming it's not an expansion loan. So that you need, though you can raise that from an investor, right? So I wouldn't worry too much about them looking through your personal information. I mean, don't get me wrong, it's nice if people don't have to look up your skirt, but if you're going to apply for any loan, they're going to look at your personal information. And moreover, if you're a business owner, then it's really important that you're showing taxable income for your most recent year's tax return. They actually look, if you're an existing business owner, they look at you more discerningly than they do if you're an individual. Because you have to understand what the SBA is really built for. The SBA is in many ways, brothers call me. The SBA is really built to help the little guy get ahead. So they're actually really okay if you're not doing all that well. That's not their concern. But what they're concerned about is if you own a business and that business is losing money, they don't want you to take on more because in their mind, you already are up to your eyeballs. They don't want you to take on more and then have it all go down to nothing. Hopefully that makes sense. If you're liking the stream, thumbs the thing up. For more information, go to jasonpaulrogers.com. If you want to work more closely with me, schedule a call on my website. If you have questions here, ask them. And let me just get a sip here and then we'll keep going. Okay. For the first deal, will the bank keep me from doing a bad deal? That's a funny question, Mr. Fralick. Short answer is they're supposed to. I've seen banks make some pretty key mistakes with regards to working capital. Usually what I help my clients do is avoid bad deals because unfortunately the incentive for these SBA lenders is to pump out deals. It's not necessarily for you to be super successful. So you'd be surprised. You can, very often I had a client call just yesterday, Sunday evening. There's a younger couple, I don't know if the two of you are on this stream or not this evening, but they had this deal they were really excited about. And the lenders were getting excited about it. And when we really looked at it, I was like, where's the upside for you? Like, where's the win for you? I see a lot of risk for you. Where's the upside for you? And upon a lot of kind of analysis, we got to the realization that there's not a lot of upside for you. There's just not. So often I help the people I work more closely with make better decisions as far as their first business acquisition. Because it's tempting to do anything, whatever deal you can. But just because you can doesn't mean you should. The bank won't always save you, is the short answer. Samuel, how's it going, partner? You asked, the number of people acting shocked after trying to pay no taxes, then finding complications when looking for exit is hilarious. Yeah, you can't, it's the old having your cake and eating it too. It's tough to have your cake and eat it too. If you want to pay no taxes, great, but you have no enterprise value, right? If you're writing everything through the business and you show $0 worth of taxable income, okay, you're allowed to do that. I mean, roughly speaking, you're allowed to make that decision. I'm not saying that you're in compliance with the IRS standards, right? But you're allowed to report whatever the hell you want on your tax return, roughly speaking. Again, I'm not a CPA. I'm not giving you tax advice. I'm just saying, it's your prerogative. But when a buyer comes and looks at your business and it doesn't show any taxable income, don't be surprised if they want to pay next to nothing for it. All right. Rockstone Trucking says, JPR, from 0 to 1, where do you stand with site visits before a signed LOI? That's a great question. So a lot of art involved in that. Certain deals I will. I'm actually looking to potentially meet a seller here somewhere in the state of Florida before an LOI. I think it makes sense for us to do that. It's a meeting that I'm trying to get scheduled here for the next 5 or so business days. So there's a place for it. Certainly there's a place for it. There's certain times where you can see enough ahead of time where a lot of my clients spend too much time doing site visits and then they haven't even seen the tax returns. And then they see the tax returns and the tax returns are just bunk, right? So it's pretty easy to waste your time if you don't know what to look for. And a lot of people do. But if you know what to look for, then it can become, what would I call it? Basically like a good strategic investment of your time. And that's the key is sure, sometimes you have to be willing to risk your time, but make smart bets with your time, especially as your time becomes more and more valuable simply as a byproduct of your opportunities, right? Life is opportunity cost. When you're getting started, I usually advise when people are first getting started before if they don't have industry experience, direct industry experience, do a lot more site visits because you'll learn a lot from doing site visits. You see how different people set up their businesses. This guy did this guy did that. This guy's using this software. This guy's using that software. This guy's business looks like a bit of a train wreck. This guy's business looks like you could eat off the floor. You learn a lot from looking at real operations. But once you feel like you have a real strong worldview and perspective on what the best practices truly are in your given business, then at that point, doing a whole bunch of site visits before you've at least gone through an initial checklist, I think is pushing on the edge of being a waste of time. So that would be my answer to that. Let's see here. Any tips on networking? I feel like I'm not conversing with nearly enough productive business owner types as I should be, or I would like to. Yeah, one piece of advice I have for that is go to really nice hotel bars. Not hotel bars, but go to nice hotels and get a $5 cup of coffee. Try to get cups of coffee or a simple lunch in really high-end venues. And just strike up a chat with people in the proximity, make friends with the staff, become something of a local. Again, you can do this at a really low-cost basis where you buy a $4 coffee and leave a $2 tip. It's $6, right? And yet you're in good venues. If you have the disposable income for it, move to nicer neighborhoods, right? That's something I certainly have done as things have gotten better for me, is I put myself in good environments where you may, bump into a guy in the elevator that, owns a $10 million business, has a $30,000 watch on, has a $15 million real estate portfolio, owns $6 million worth of equivalent in Bitcoin, whatever, they're into their own thing. But you have to be in good environments for that to occur. Just 4 or 5 years ago, I was living in the ghetto of Santa Cruz, California. I had my car broken into 3 times in a year and a half. And after the 3rd time, I moved the hell out of that place. But I lived in the ghetto. I heard gunshots near my place. There were needles on the ground. It was a ghetto, right? So imagine that. I wasn't meeting too many people who had 8-figure real estate portfolios wearing a $100,000 watch, right? I was I was meeting people who were trying to figure out how they could, steal something so they could get some heroin, right? So get yourself in better environments and just practice being social. If social skills are something that you lack, I'm a huge fan of Toastmasters. I'm also a huge fan, if you're a single guy, of being quite proactive with the opposite gender, which some of you may know from the old days was a former life of mine where I used to help guys socialize, let's just say, with individuals of the opposite sex. I digress. Do things you can to socialize. It'll be good for you and your confidence. Okay, let's see here. How much do you charge for coaching, and do you give scripts? I charge a lot. Minimum of 4 figures. The real McCoy stuff is up to 5 figures. I don't proclaim to be cheap. You can torrent a lot of my stuff, for the record. And if you just want like the scripts and stuff like that, I mean, I don't know. There's some guy or group of guys that are like selling my stuff for like $89 or whatever that you can torrent it, or I don't know. Like if you want to go torrent my stuff, go get them. But if you want to get my time, it is expensive, but the results are there. I mean, I've seen the difference between people who just have my online training versus people that work with me directly, and the results go up by about a factor of 10. The success rate goes from 2 to 4% up to 40+%. So it's quite staggering if people work closely with me, but I get it that it's not in everybody's budget. Usually speaking though, my sincere truthful advice is if you couldn't afford to work with me or somebody like me, then you probably aren't ready to get into this game in the first place. You have to remember, I paid about 20 grand to learn how to buy businesses when I got started. Went over to a little place in Scotland, met a older gentleman that some of you may know, and not going to say that I got perfect advice in all regards there, but I'm very glad I made the investment. His information was a little bit outdated in some regards, and yet ponying up the cash and really investing in myself and my future in the business acquisition world was money extremely well spent. So if you're in a position where 4 or 5 figure investment is exorbitant for you, probably good to keep your head down, maybe get in sales, Toastmasters, grind, stack cash, build yourself up as an individual, and then get to a place where that kind of an investment is more reasonable. Because a lot of people make a lot of mistakes when they get into the business acquisition world. I'm never going to say that business acquisition's easy. It's not easy money. It's big money, but it's not easy money. It's not easy money. And there's a lot of pitfalls. I've seen a lot of people make 4 and 5 figure mistakes, and some, of course, much bigger mistakes than that, by trying to DIY it. I do everything I can to be as valuable as I can on the internet for free, but at some point, I'm not just going to give all of my time away to everybody in the world and then go bankrupt in the process, right? So it is what it is. Okay, moving on to the next one. It's Esso says, do you recommend acquiring a business which is solely operated by the owner? No, I'll just say it right there, i.e. a chiropractor. No, I don't. If so, what do you do when the owner operator is leaving? You have a job, my friend. I mean, if you want a job, then that's the kind of business you would buy. But no, I don't recommend that because, I don't think you get into the game of business acquisition to acquire a job. You get into the game of business acquisition to acquire a business. Seems a little kind of like obvious, but I mean, it is what it is. So that's my answer. Okay, we'll do a few more of these. If you have questions, drop them now because I will be signing off here fairly soon because having to hold the old iPhone up as opposed to the webcam on the computer is not the most fun, but that's all right. I digress. Let's do some more questions. Sharon says, no more government-backed loan in the UK and banks want skin in the game. I find buy-to-let investors to buy the premises while we focus on the business, care homes. What are your thoughts on this? I don't mean to not be valuable, but honestly, Sharon, I'm not a Brit. I'm not in the UK. I don't have a super strong worldview. I mean, my honest take is if you can, come to the greatest country in the world and buy businesses in America and get a traveler's visa or a foreign visa and buy businesses here using the SBA. And that can be a hell of a lot more help to you. I mean, you could try to do an equity fund, but usually you're going to get screwed over if you do an equity fund because all the equity is going to want preferred treatment, not you. And then you become a glorified M&A monkey, to be honest with you. It's kind of monkey chase the banana, if you will. It's like, okay, we gave you all this money, now go run around and do everything, and you're going to get 10% at the end. You just don't have a lot of leverage if you bring on a bunch of investors. So if you're truly telling me that the debt environment in the UK is screwed, and at this moment, I don't have any clients I'm working with in the UK. But if you're saying it's just absolutely screwed, then my honest answer to you is, well, see if you can't get yourself over here and do deals in the US of A. That's my honest take. Zeno says, thank you so much, Jason. You got it. Hopefully whatever I said was useful. I forget what I answered for you, but cheers. Cassialon Williams says, hey, Jason, congrats on your success. I'm currently putting together a deal team, and I have been talking to a multitude of different industry experts. And in talking to those industry experts, and then it stops. I was getting invested in what you had to say, and then it disappeared. So maybe you can write part 2 and we can continue the conversation. Zion Global says, how to buy a business in Florida, or how to buy business in Florida license that require construction license. Okay. Generally speaking, for licensed businesses, which I am in, you need to find somebody that will license your business. Usually you can secure this person for about $1,500 to maybe $3,000 a month. It's basically just an operating cost, right? Almost think of it like a bookkeeper or a, I don't know, a purchasing agent, or, it's just like another person on payroll, honestly. Of course, if you can get that license, then that's going to save you the $3,000 a month or the $1,500 a month. But if not, then you basically just find somebody with that license. They license you. Did I say that right? They provide the license for you. That sounds better. And basically their licensing will show up on, I think in Florida, it's the CSLUB. It's basically the state website for licensing, where like if you go to the state licensing website in the state of Florida and you type in B&B Professional Plumbing and Air, you'll see our license holders there, right? For the respective entities that we have. We have multiple legal entities in the state of Florida for our plumbing division and our AC division, but you'll see them there. And that's really what inspectors are looking for. Homeowners are going to look there. GCs, if you're doing like the bigger jobs, will look there. So you need to make sure that their licensing information is populated for your business on the required state websites. That's basically the punchline. Okay, Richaroo, quite the name. Richaroo says, Jason, what profit margins do you look for in a business, or do you just consider cash flow and that's it? I mean, cash flow is like a cousin to profit. I'm not going to pretend that I have the precise memorized definitions of profit versus cash flow. I generally understand what they both are, of course. But I would say to you that double-digit bottom line businesses are what we're looking for. In other words, double-digit profit. Okay. There's certain industries like manufacturing comes to mind, and there are others. Distributors, in many cases. I was looking at a distributor business here just the other day, and they had like 5% profit margins. I'm not interested in buying businesses with profit margins that are that low. Ideally, you're looking at businesses that have 15 to 20% profit margins. But I get that not all businesses are going to be quite to that level. But, double digit certainly is what we're looking for. And if it's not a common occurrence for businesses in a given industry to produce double digit profit margins, then I'm not interested in pursuing that given business. Hopefully that helps you there. One sec. Should I give my investment thesis or business plan to my deal team? Yeah, absolutely. I mean, your deal team is there to literally help you enact your endeavor, which is, of course, the execution of your investment thesis. So absolutely, by definition. Lionel, how's it going, partner? Long time no talk. Lionel and I have worked together with his incredible partner, Senor Paris. Let's see what Lionel has to say. Lionel says, hey, Jason, thanks for sharing your knowledge. Question here. If a deal is SBA pre-approved at a certain number, okay, does it make sense offering lower than what it is approved for? Is it a risk of deal loss? Okay, so number one, SBA pre-approvals sometimes are a farce. Sometimes they'll be pre-approved from like a year ago, and then the business has done a lot worse, but the broker still, shares the pre-approval. There's always risk of deal loss, in any deal. I don't like playing afraid. In business acquisition, you have to understand that not all of your offers will get accepted. I had a really good mentor in my early days that gave me some good business acquisition advice. And one of his credos was, when you make offers, you should be a little bit embarrassed about the offer that you make because the price that you offered was lower than what everybody was expecting. The other piece of advice he gave me was if the math doesn't make sense on a napkin, then the deal doesn't make sense, right? So if the numbers don't make sense on a napkin, if you have to use some really fancy software or spreadsheet, whatever, to make sense of the deal, then it doesn't make sense. So look, deal making is about making deals that make sense for you. Now, of course, you have to be mindful of how competitive a given industry is and how competitive you feel this specific deal will be, and try to be mindful of the competitive environment. So I'm not telling you to be totally tone deaf to the realities of this given business opportunity. But at the same time, pre-approval letters are often barely worth the paper they're printed on. Sometimes they are. Some bankers will actually do legit pre-approval letters and take the time to really actually audit the financials and go through the financials before providing a pre-approval letter. But many cases, they're just goofy. So to answer your question directly, Lionel, I would run your numbers, come up with what you believe to be a solid and fair and reasonable valuation for the business, and hopefully you've built some rapport with the seller on a discovery call or maybe even a site visit, and then make your offer. And if it does not get accepted, hopefully the seller will counter. If the seller does not counter, then you can ask either the seller or the broker, where were you looking for the number to be? And then at that point, run the numbers based on what the seller thinks. And it's better to ask the seller than the broker, because otherwise the broker will often feed you BS. Whereas, of course, the seller can feed you BS too, but at least it's coming right from the source. But ask the seller, okay, well, if this offer doesn't work for you, then what number were you looking for? They probably won't give it to you, but some will. Or sometimes they'll give it to you in kind of a roundabout way. Oh, about 10% higher, we'd be close. Okay, well, run the numbers if you offered 10% more than your existing offer. See if it makes sense at that point. And if it doesn't, then you either get to pull away or you can make a subsequent offer, say at 3 or 5% higher. So it's a dance. It's certainly a dance. But know that if the majority of your offers are getting accepted, it means you're offering a little too much usually. I really like what my mentor told me about, if you don't get a little bit embarrassed about your offer, then you probably offered too much. Because if you get deals accepted that are on your terms, then you truly get a deal. We're in the business of deal making. Deals are good for us. Doesn't mean the seller is getting screwed, but if you don't watch out for yourself, then nobody will. So that's my take. Cassie Lon Williams, you were asking a question earlier and then it cut off. What would you do if you keep getting pushback from industry experts? I'm in the senior living space. They are saying they don't want to join because you either have to have industry experience, the assets, or the capital. I mean, there's a lot I could say there, but ultimately it just means you're not positioning yourself well enough. And I hate to say it, but so many people that try to DIY this just hit all these roadblocks, and it's because you're not communicating the necessary points with confidence. So for example, you do have the capital. It's called SBA capital. You have your first $5 million literally waiting for you to use. So you do have the capital. Okay, industry experience. You don't have industry experience. Yeah, that's why I'm reaching out to you, Bruce. Because I know how to get the money. I know how to find the deals. I know how to analyze these deals, but I need somebody with the industry experience to help me get there. That's why I'm reaching out to you, Bruce. Because I know how to get the money. I know how to find the deals. I just need to make damn sure it makes sense. And you're the industry expert, right? Yeah, that's why I have conversations with you and 5 other individuals with a similar pedigree to you to see who's the right fit to join me in my endeavor. Roughly speaking, that's the kind of thing I might say. But ultimately, if you're getting pushback from your deal team applicants or the people that you're reaching out to for your deal team, it means you're not communicating to them in a way that is persuasive enough. And to be very frank with you, if you're struggling to build a deal team, then you will definitely struggle at the future steps because it only gets harder, to be totally honest with you. That equally said, if you find that you're able to build a deal team with relative ease, then the same pitch you use to raise the interest level with the deal team, the same general communication that was effective in helping you build your deal team, use that same communication when talking to banks, talking to brokers, and to some degree talking to sellers, but especially the banks and the brokers and the investors, right? Because you're generally selling yourself, selling your industry, selling your vision for how you're going to dominate through business acquisition when you're building a deal team. And you're going to be making the very similar points to brokers, bankers, and investors going forward. It goes back to the question we got earlier about, how do I raise equity? It's like, well, you don't just raise equity. You don't just raise investor capital. You build, well, first you study the hell out of the industry. And then after a lot of research, you pick a great industry and you're able to speak well about that industry because you've done a lot of homework. And then you build a world-class deal team. And then you start talking to banks and you start looking at deals and you start introducing yourself to investors and you go through all these steps. And then finally you have this world-class industry with this incredible deal team. And you have this great deal, and you know it's a great deal because you've looked at 50 deals over the last 4 months, and you know what a great deal looks like at this point. And your industry expert has vetted it, your accountant has looked at it, your lawyer knows how to write up the contract to get this thing done. You've got a banker hot and heavy, and you can cut in the investor for a great deal, right? So it all crescendos, but only if you lay the proper groundwork. Zano says, Toastmasters, heard of it, all good things. Yes, Toastmasters is a very good thing. Mike McLeod says, great information. Thank you, Mike. Thanks for sharing. You got it. When brokers ask for proof of funds or financial statements at the start, how do I handle that? Mike, I have the perfect video for you and for everybody else who struggles with the proof of funds question. Go to my YouTube channel, type in Jason Paul Rogers proof of funds. There's a 60-second short, just like this, that are filmed on an iPhone or a mobile. Watch that video. I lay out the perfect thing to say word for word. Watch that. After this is done, this live stream, I highly recommend going there and watching it. It gives you the perfect script of what to say. But the punchline is you basically say, listen, I don't need proof of funds. I have investors that are willing and able, but more importantly, I understand what the SBA is. It's government-backed finance. So as long as the deal cash flows, I already have $5 million. So stop messing around and let's get into looking at the deal. Okay? That's basically what you say. But I lay it out more succinctly and more compellingly in that video. By the way, if you're liking this, if you don't mind thumbsing this thing up, give it a thumbs up. Helps the algorithm, and I appreciate you all being here. Sorry for the technical difficulties earlier, but I'm glad that you all found your way over here. And we're going to keep going for a few more. But we are going to wrap this up shortly. So if you have questions, get them in now. As they say, speak now or forever hold your peace. That seems a little dramatic, but you get the gist. Ask your questions now. We'll see if we can't get to you. What is the percent of profit you put back into your business, and what do you pull out for salary and dividends? I mean, that's a personal question, right? I know for me, I take out enough for me to live comfortably, to live well, but not exorbitantly. I'm not driving a $250,000 car. I'm not wearing a $100,000 watch. To me, that stuff isn't really what I'm interested in. What I'm interested in is building a super valuable business over the next 5 to 10 years. And so therefore, I take out enough money to live comfortably so that, we're well taken care of, but not so that I can be flashy and, look good on Instagram or all that, because I'm not trying to be an influencer. I'm not trying to look flashy. I'm trying to build a really, really valuable business the right way. And to do that, you want to put as much money back into the business as possible. We're in the process of buying about $200,000 worth of vehicles right now. I think 6 vehicles in total. Some pickup trucks, several vans, a whole bunch of stuff. Why? Because it's going to help our business grow. We're really taking on the entire state of Florida now for, one of our best customers, one of our best clients. And I need great vehicles to make sure that we perform. So, that's money that if I wanted, I suppose I could have taken out. But no, we're putting it in the business because it's the right thing to keep growing our business and our enterprise value. Excuse me, stuffy nose. So I digress. That's my answer. Cassie Lon Williams says, I've spoken to different brokers and business owners looking to sell, but know I need to get my team first. What would you do if you keep getting pushback? Well, with due respect, Cassie Lon, you're getting pushback because you're going about this process kind of like a cocaine cowboy, which I do not use as a compliment, with due respect. You need to follow a given process that makes sense logically to, I mean, to be totally honest with you, you're wasting the broker's time and the business owner's time by reaching out to them before you even have a team assembled to help you look at deals like a professional. So yeah, you're honestly building a bad reputation for yourself by going about this in a way that is, a little schizophrenic. And this is what happens when you just kind of shoot from the hip, is unfortunately, you can build a bad reputation for yourself before you even get started. I don't mean to call you out, but I mean, it's YouTube. It's not like these people know you, but hopefully you are listening right now and taking note. Go through a proper process and you'll be treated like a professional. But when you just wing it, oh, I'm going to call brokers today. Oh, I'm going to talk to some owners today. Blah, 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 blah. I don't really have a team or really an investment thesis or anything, but whatever. I'm just going to see how this goes. You're wasting people's time. And to be honest with you, and again, I don't say this out of malice. I just say it from the reality and from sincerity. You deserve to have a bad reputation. You're wasting other people's time. Time is money. I mean, I get, some people want to DIY it and God bless, but at least go through the damn content here for free and follow a process, man. That's my honest take. Not a good look for you. Thoughts on the assisted living industry related? Why did I choose plumbing and AC over assisted living? Because there's too much government intervention in assisted living for my preference. Medicare, Medicaid, all that. Obama's in the White House. Biden's there. Trump's there. I like businesses that work, whether it's a Democrat or a Republican in office, that don't have too much of a tie-in to the government. I know it sounds a little funny talking about SBA finance being government-backed finance, but that's just to get the money. When it comes to the business that I'm allocating that money to, I tend to like free markets to dictate that, especially when the free market necessitates persistent and continuous demand. There will always be a demand for air conditioning in the state of Florida. There will always be a demand for plumbing, as there's been that demand for over 2,000 years since the days of the Romans with their aqueducts. So that's why. Paul says essential. Yeah, those essential businesses, exactly. Shop Like Mike says issues with plumbing is recruiting and retaining employees. That's right. That is the biggest challenge. And I relish that challenge personally, because if you build a good company culture, have good benefits, and if you're a strong recruiter, you can do pretty damn well. Any thoughts on deal team compensation, equity percentage splits for an assisted living roll-up? Yeah, 2 to 3 points for the accountant, 3 to 5 for the lawyer, 3-ish, 2 to 3 for the industry expert. Roughly speaking, give away 10%, keep 90. If you have money, then in some cases you may want to pay for the legal, pay for the accounting, and maybe just bring on the industry expert and then keep upwards of 95 plus. But if you don't have money, or at least a lot of money, where writing a $10,000 check at a time doesn't feel like that big of a deal, then I would do what I just said. Zion Global says, buy a deal that requires a Florida license. It's like a half question. I don't really know what you're asking exactly. But, I mean, I'm in a business where there's a licensing component, yes. And I like moats. I have a video on YouTube that talks about, I think, industry selection. And it says moats. If you type my name, Jason Paul Rogers, moats, you'll see a video I filmed several years ago now about moats. And I talk about why I like businesses with moats, essentially. And it's something I learned from Warren Buffett from reading his shareholder letters. Highly recommended. It's a great read, by the way. Let's see. Looks like I got lost in my chat here. Bunch of questions. Paul asks, mind if I ask what software you guys use for your plumbing and HVAC business processes? Yeah, Service Titan. We use Service Titan. It's more expensive. You have to have enough guys running for it to make sense. I'm thinking about helping plumbing and HVAC companies in Texas with their systems. And if I'm using the same software as you, it should make an easier acquisition integration later down the road for you. Yeah, we use ServiceTitan. If you get a whole bunch of companies to crank using ServiceTitan, that'd be great. Can you take over an SBA loan from Mr. 3D Printer? I know this guy. How's it going, Senor? Senor John, good to hear from you. Short answer is I don't believe you can. He says, can you take over an SBA loan from the existing owner instead of getting a new loan financed with the current rates? No, I don't believe they're assumable. You can have your lawyer take a look at the loan docs, but I've never heard of an SBA loan being assumed. I do believe you're gonna have to refi. I'm in a developing country. This is Eddie Naki saying, I'm in a developing country in the Western South Pacific, neighboring Australia. What would be your advice on how I can best be successful in doing business acquisitions? Hand on heart, I don't have a lot of advice for you. I really don't have too much advice for you. I would honestly say to you that if you could try to find a way to buy a business in America by getting a visa, some businesses will allow you to get basically a worker's visa to buy a business using SBA finance here in the States. That would be something I'd look at really seriously. Thank you all for being here, by the way. If you're liking this stream, if you wouldn't mind sharing it on your LinkedIn or your Facebook, your Instagram, I would appreciate that. Trying to get the name out there. My big motivation for talking about business acquisitions is ultimately to use this as a network and a platform, social media that is, to raise capital at scale. And try to be as helpful as I possibly can by just giving honest, legit, from the trenches business acquisition insight. If those of you want to go deeper, you can work with me. It's not cheap. I only charge for my time. I don't charge for information. I try to give information freely, but then if you want my time repeatedly, then I charge. But anyways, if you'd share this stream, thumbs it up, I'd really appreciate it. I'll keep answering questions here for a minute or two. My throat's starting to go and my arm's starting to get a little sore as I hold this damn iPhone up for over an hour now, as I lost my stream initially, but it is what it is. I love doing these Q&As, love keeping in touch with some of you, seeing some familiar names and faces. Some of you are new, some of you have been following for a while. But either way, appreciate y'all. Thanks for sharing, thanks for thumbsing up, and let's keep going for a few more. Mr. Racer37 says, if the SBA looks at tax returns, what if you didn't make enough to file a personal tax return? That's a hell of a question, to be honest with you. I've never been in a position where I didn't have to file a tax return. I guess that would presuppose like you literally didn't work at all. Which if there was a reason for it, you could probably get away with it. You know, if you could explain that you were taking care of a loved one or you were going through some illness, or something, if you had a legitimate kind of narrative around it, you could probably get around it, to be honest. Not making money or much money as an individual is generally not a big deal for securing SBA finance. What they mostly look at is that your credit score is 650 or better, you don't have felonies, and in the business acquisition you're looking at will cash flow. Okay, Shop Like Mike asks, how do you manage recruiting and retaining issues in your sector? Number one is we try to have a really healthy company culture, which I'm sure we could do a lot better at. But I really try, and we really try to do well by people. That's number one. And on top of that, we have good benefits. We have a good benefits package. We pay people well. We try to be really competitive. So that's the 1-2 punch. On an earlier stream, you recommended buying law firms if you were a lawyer. I'm a business attorney. This is Daryl Cleveland. Any particular insights from an interested newbie? Always interested in more wisdom. Thanks. Yeah, Daryl. I think there's some challenges with buying certain law firms. Yeah, I was actually talking to a different lawyer who's a client of mine now, who was talking about how he thought that would be a really challenging endeavor. I think it probably depends on the type of law firm and the type of legal expertise that you have. But I think more than anything, it's about you figuring out who do you want to be and what do you want to do in this life. And I know that's existential, but I think all of us should be asking that question. Who do you want to be and what do you want to do? Things that seem like big challenges, usually if you can find a way to solve it, there's just tremendous money to be made. And, you know, for me, I'm trying to build a massive billion-dollar business in the utility space, and it's a huge challenge. And you have labor issues, it's very competitive. We're competing with private equity firms all the time, very tight labor market. It's tough, but that's a good thing, because that means if and when I'm successful, I'll be very well off in the end. So I think for you, it's about figuring out just how much risk do you want, how much of a struggle are you willing to endure, and how badly do you want whatever that result is. But the thing I think that's interesting about law firms and acquiring law firms is there's such a history of law firms merging and acquiring one another, and there's such a there's so many really dominant law firms, and there's so much money in the legal profession that there's undoubtedly a huge opportunity if somebody really grabbed that and just dominated it and took it hyper seriously. So if it's something you really want to do take hyper seriously, schedule a call, go to jasonpaulrogers.com. My team and I can share a little bit more information with you. But I think for you, it's about reverse engineering. What do you want? And based on what you want, are you willing to pay the price? Because I think there's a huge opportunity there. I think it would be very intense, very competitive, but again, very opportunity laden. And the fact that you're a lawyer means you can acquire businesses that most cannot in that given industry. Charlie says, could you briefly cover a few reasons you passed on deals that appeared good at first glance? Yeah, sure. Books were dodgy. Assets on the books were super old and tired. Shady business practices with regards to not reporting income, paying people under the table, dirty cash, if you will, bad reviews, or hidden reviews, but when you looked a little deeper, the business kind of had major customer concerns just underneath. I've seen businesses where they provided 5-year labor warranties and then have used subcontractor labor to do the work, which in other words means the workmanship is questionable, and as the buyer, you're responsible for warranting that work for up to 5 years. I've seen plenty of reasons that are, that totally kill a deal, that are not right at the surface where you have to dig. Certainly, you got to be very mindful of all the skeletons that could be hidden and where they might be hidden. It's very important. Okay, a few more minutes here. If you have questions, get them in. We'll see if we can get to you. Hello, Jason. I'm a foreigner who wants to do deals in the U.S. I probably won't be approved for an SBA financing. Should I do a 100% equity deal to build a track record before using commercial debt? I don't think that's the right approach, Gustavo. How do you get yourself in a position where you can be qualified? That would be my recommendation for you. Because you still won't have a track record using debt if you use equity. You'll have a track record, but not a track record for using debt. So I would work on how to qualify yourself by either getting citizenship or applying for like a green card, looking in that direction, as opposed to doing all equity. 400 Racer laughs that, I say you can torrent my stuff. What? I mean, I don't believe in selling information. I used to have a course. I still have a course. That's what you can torrent. It's a great course. But what I just found with clients is, the real results come when I work more closely with people. So that's why I say go torrent my stuff. Okay, Lionel keeps asking the same question over and over. Lionel, you're a punk, but I already knew that before this Zoom call or this live stream. Somebody writes here, found a deal, $700,000, $300,000 for SBA loan, $400,000 in seller carry. I'm going to assume that seller carry is second position. Second position means that the seller would have second lien rights to the assets if the deal went under. The DSCR is either 3 to 4.3x, depending on a 10 to a 30-year term. 30-year terms are very unusual in business acquisitions, but I digress. Can I get a conventional loan with that DSCR? No SBA, BS, or personal taxes. Here's what you have to understand. All lenders are going to want your personal information. Don't try to run around that. And if you do want to run around that, with due respect, you're just not a good fit for buying businesses. Like, the game of finance they're gonna crawl up your ass with a microscope. It just is what it is. I've applied for so many loans and received so many different financings, whether it's, high limit credit cards, vehicle financings, working capital loans, line of credits, business acquisition loans, working capital loans, stock purchase agreement deals, asset purchase agreement deals, like commercial loans, SBA loans. I've raised a lot of capital. I've raised a lot of equity too. People are going to want to see what the hell's going on in your world financially before they give you money. Just a general rule of advice. It's just the way it goes. So, you have a clever structure here, Mr. Z400 Racer 37, and I appreciate your engagement with the stream tonight. I'm not trying to bust your balls, but I'm just trying to be honest with you. You all deserve transparency and honesty. And honestly speaking, if the idea of sharing your personal tax returns or your personal information is threatening to the point where you refuse to do it, then you're not in a position to go buy businesses competitively. That's my take. Officially, you could do some, fly-by-night, 100% seller finance deal. But the problem is 99% of the time, those 100% seller finance deals are not quality companies. So I digress. Peter Frolic, when does your membership take new students? Monthly, quarterly? If you're the right fit, we can enroll you. We can enroll you this week. You can schedule a call to learn more. My team does try to disqualify you because we really, I work with everyone that's in the membership, and it kills the quality of the membership call for everybody if somebody's not a right fit. So I'm sure you probably would be, Peter, but just so you know, we don't hard sell you. We actually look for reasons why it might not be a fit. But if it is a right fit, then hell, we could get you signed up tomorrow. So schedule a call, jasonpaulrogers.com, and you'll speak with Donna or Sagar, both of whom are trained by me personally and are pretty sharp, pretty good at what they do, and can help you out. Do you have a sample business plan, executive summary you'd be willing to share? You can go torrent it. That information is available for my paid clients, but again, you can go torrent it if you want. I just don't have a place to house that information on YouTube, so that's part of the reason that it's available for my clients, or it's available if you want to go torrent it. Repracticing networking, go talk to girls. Okay, top 5 one-liners to get the ball rolling. Top shelf, hook, line, and sinker stuff. Okay. Let's go back to the old days. Back in the day, I used to help guys interact with gals. Look, just be simple. Hey, you look great. I wanted to introduce myself and say hi real quick. How are you doing? Easy. Hey, you look good. Look, I'm going to be honest. You looked really great, and you caught my attention. I wanted to introduce myself real quick. I'm Peter. Nice to meet you. I'm Jason. Nice to meet you. I'm a little out of practice as far as, I now have, a ring on, so I'm out there shooting my shot on a day-to-day basis, but you don't have to be clever. And the truth is once you get over the fear, then your natural self comes through and you end up saying clever shit automatically because you're not in your head. And this is the same whether you're selling, speaking in front of an audience, talking to a pretty woman or a pretty guy. It's the same no matter what you do. But in the short term, just say, hey, you caught my attention. I wanted to introduce myself real quick. I'm Jason. Nice to meet you. What are you drinking? What are you doing? Or whatever, contextually. What brings you here? Have you been here? Whatever. Just bullshit. I'm not consulting in that world anymore, though. So, again, I'm not thinking of banter lines on a day-to-day basis like I used to 4 or 5 years ago. Okay. If the seller is asking 3 times earnings and the DSCR is 170, do you have to still try to discount to even lower? Lionel, at 170 DSCR, it's a doable deal. It is a doable deal at 170. You can certainly get that financed, assuming it actually is 170% DSCR. However, it's a lot of it. A lot of it you have to ask yourself: how involved is the owner? You know, how high quality is the business actually? And you have to really try to project future cash flow. You know, historical cash flow tells you something, but it doesn't tell you everything. Sure, you know, past performance levels are indicative of what future performance will be, but it's no guarantee that because the business cash flowed $500,000 a year last year, that it necessarily will this year. So you have to ask yourself, does this business look poised to be successful in the future months and years based on its location, based on its industry, based on its management team, based on its customer base, based on its review, based on its Google ranking, based on a plethora of factors, right? So, you know, 170% DSCR is doable at base case, which you know what base case is because we've worked together, but it doesn't necessitate that it's a good deal. You have to dig a little deeper, and you know, we can potentially talk about that offline. Dave Kittle, how's it going, partner? These NJ, New Jersey physical therapy owners want more than 3 times net earnings. Yeah, look, I mean, I'm sure they do. You're trying to do deals in Manhattan. You're gonna pay an asshole tax in Manhattan, right? So, you know, there's a reason I did my first deal out in Nebraska. And I know that's probably not what you want to hear, Dave. I'm not saying you have to do a deal in Nebraska, but, you know, I'd ask a couple of questions. What size deals are you looking at? Number one. What metros or markets are you looking for deals in? Number two. And are you finding off-market deal flow, or are you only finding on-market deal flow? Remember, that broker's tacking on 8 to 12% to the deal. So if you can find off-market deal flow, you'll save yourself 8 to 12% of the purchase price. And, you know, for a $2 million deal, that may save you $250,000 or so. So those would be some thoughts, comments. The retired broker says you can file a tax return and show $0 of income if you have none. Good comment. Might be something worth doing. I know somebody was asking about that earlier. Who on your team will help you build your investment thesis or business plan? Industry experts only or everyone? I mean, I usually help my clients do that. Usually the investment thesis is built around buying businesses in a really strong industry and engaging in a roll-up strategy whereby you buy businesses at 3 to 4 times earnings and then sell them at 8 to 12 times earnings. Like in a 30-second elevator pitch, that is the investment thesis. But yeah, your deal team can certainly help you. And I'd also implore you to just watch the videos here on the YouTube channel for some information there. And then, of course, you've been asking a bunch of questions. If you want to go further, go to my website and talk to my team. But the punchline as far as your investment thesis is, you know, you're going to be buying businesses at 3 to 5 times earnings in this great industry that you've selected. And it's great because of A, B, C, D, and E. And we're going to grow these businesses using strategy 1, 2, 3, and 4. And through a combination of organic growth and M&A growth, you know, we're going to ultimately sell this portfolio at 8 to 15 times earnings after a number of years. We're going to be making acquisitions in the Southeast because we like the inflow of population. We like the politics. We like the pro-business culture, et cetera, et cetera, et cetera. We'll be avoiding these states for these reasons. Most of you know I prefer doing business in red states over blue states for fairly obvious reasons, right? But I mean, you just are going to describe what your intentions are. And I'd say your industry expert is probably the one most qualified to help you with that. Begant asks, how do I become a loudspeaker? I don't think loud is the answer. I think competent is the answer. And my answer to that is Toastmasters, as we described. Sign up for Toastmasters. It's very affordable, even if you're on a budget. Do you know any loans to get funded for trading? No, I don't. Short answer. I'm not a trader. Somewhat off topic, any recommendations on what is a good industry for a salesperson without having experience in that field? But you can bank a bunch of cash fast by working your tail off. I don't really subscribe to that line of thinking, so I don't really know what to say to you. I believe in buying businesses and industries that are stable and secure. And good timing is my throat is killing me, and it looks like we're getting to the bottom. I think I've answered all your questions. If you have one or two more before we go, drop them. Otherwise, we're going to start wrapping. If you don't mind sharing, what do you want to buy in the future in terms of fun when you exit? Good question. Right now, all I can think about are airplanes. I've been flying a lot lately. I'm working on getting my pilot's license. So, think of planes that have a ridiculous price tag, and that's certainly probably a key amongst the things that I'm interested in. But I don't know. I don't think too much about the hedonistic side of things. I mean, I live a really nice, pleasant, lovely life when I'm not working, which is rare. We eat well. We go out Friday nights and sometimes Saturday nights, and I'm getting to fly now, which is fantastic. But we take good trips. I was in Copenhagen a month or two ago. Had a wonderful time. But I don't think about it too much. I love the sport of business. I love the sport of business. And I can't imagine retiring. And I think that's the kind of mindset that I notice people who really do well in this game have, is they just love competing. They love business. They love the fast pace. They love the high stakes. I live for this shit. I just fucking live for it. Excuse my French, but I absolutely love it. So I love the nice things. Don't get me wrong. I mean, I live in a lovely place. This is my view from my office. You can't see that well, but it's a nice view. I'm not going to lie. So, I mean, I like nice things, but I just like the competition more. So I don't know, to answer your question, but aviation will probably be key amongst it. Anyways, I think that's it. Appreciate y'all. If you'll thumbs this thing up before you go, I'd appreciate it. If you want more information, go to jasonpaulrogers.com. Feel free to schedule a call if you want to learn more about working with me. If you want me to give you more personalized advice like this on an ongoing basis. And otherwise, thank you all for being here. Appreciate you. And I'll talk to you next time. Cheers and bye-bye. Have a great night.